Um, Hello everyone. I'm Abdul Fattah, and me and my group today we're going to present about the impact of COVID-19 pandemic on Malaysian SMEs. So to start with introduction, uh, SMEs has always been a lifeblood of Malaysian economics. In 2019, they contributed 78.9% of the country GDP and 48.4% of the country unemployment. So according to Department of Study Malaysia 2020. And SMEs are vulnerable to economic turmoil due to the size and limited resources. COVID-19 impacts on SMEs can be categorized in decline of sale and profits, cash flow, and operation uh, challenges and needs for digital transformation. Yes. So the charts here is show us the contribution of SMEs and the GDP of SMEs. As you can see, the green line here, I showed the SMEs GDP, which is reached its highest peak in 2014, and from 2019 it start to decline rapidly because of COVID-19, which is reaches its lowest at 2020. And this is due to the COVID-19 health crisis. The objective of our research is to assess the impact of pandemic on SMEs with a highlight of the financial and digitalization impact, evaluate the role of the government support, and to provide recommendation and solution for SMEs. The issues to start with many emerging challenges in the area of financial and operation and utilization and policy. Financial issues is from reducing sales and revenue. COVID-19 pandemic had a significant impact on Malaysia SMEs, especially in terms of reduced revenue and earning. Lockdown measures and social distance guidelines have distributed traditional business model and changes consumer behavior and reduce sales for many businesses. According to Small Business Association survey, 68% of SMEs saw sales decline in more than 20% in 2020 compared to 2019. SMEs uncertain about their business and performance in 2021. Next. So consumer attending to online shopping for safety and and convinces and created demand for e-commerce. SMEs was slow to adapt digitalization, faced challenges in sustaining sales and revenue. The United Nations Industrial Development Organization, this development organization, which is UNIDI, conducted a comprehensive research survey, for example, of 57 firms. 47% of them are small firms, and 53% are medium and large firms. The result of expecting a drop in revenue and level of expecting loss in revenue as follows. For the figure two, it shows the frame expected a drop in revenue, which shows there is 91% for the full sample to expect a decrease in revenue, and 100% for the small frames, and 87% for medium and large. And for figure three, it shows the level of expected losses in revenue, which is uh, categorized in moderate, strong, and extreme. And for the full sample, it showed that 43% are extreme losses, extreme expected losses in revenue. And for the small businesses, it showed there is 61% of extreme losses of expected loss in revenue, and the same is referring to 50% and above in the decrease. And for the medium or large, it showed there's 27% of extreme expected losses in revenue. It's for the cash flow problem, the economic turndown also causes the consumer to delay payment, causing a cash flow problem. while government soft loans provide the short-term cash flow support for SMEs, the sustainability depends on the recovery of demand. So due to the reduced sales and supply chain distribution, many businesses struggle to generate enough cash to cover ongoing costs and meet financial obligations. A declined cash flow can have several negative effects on the small businesses. If businesses are unable to pay salaries, they may force to lay off employees to reduce working hours, leading to increased unemployment and economic hardship. According to the same research of the UNIDO, as I mentioned above, the result of the cash flow shortage showed that 89% of the small firms shows they have a shortage in cash flow, and 20% of the medium for the medium firms show they are a shortage in cash flow. Next, I will pass it to Salvage to continue with the presentation.
Thank you, Fatah. Now I would like to discuss regarding limited access to funds. So there are a few reasons why these SMEs have limited access to funds. The first one is there is a delay and rejection by banks when obtaining loans. Many individuals rely on banks to get in emergency cash injections into their business. But to get this help, they need to meet certain criteria like a good credit score and good repayment of earlier loans. The business must also have good financial records and some reasonably valued assets that can be used as collateral in the event that the business is unable to repay the loans, and as such, these assets will be seized by the banks. Many SMEs do not meet these requirements, and even if they do meet these requirements, due to the increase in influx of people requesting loans, the banks are unable to provide them to everybody. And as such, not everybody who meets the criteria will guaranteed a loan. Then the next reason is owners having low wealth levels. What this means is the owners of the SMEs may have low levels of savings, personal savings, in order to help fund the business in times of needs. The next one is lack of knowledge on the financial assistance available. Most business owners may not have a very good understanding or knowledge on the available aids and financial assistance provided by the government. These are three examples of incentives provided by the government that I were able to find. The first one is a special relief fund, which its purpose is to help in the short-term cash flow problems faced by SMEs that may have been affected post-pandemic. The second one is agro-food facility, which its purpose is to increase food production for local and export purposes in the country. And the third one is SME automation and digitalization facility, which its purpose is to incentivize SMEs to automate their processes and digitalize the operations to improve productivity. My next point is for increased operating costs. Next slide. So there are four major reasons as to why there's an increase in operating costs for businesses in SME due to post-pandemic. The first one is rise in oil prices. This is in part due to the commodity price crash in March of 2020 at the start of the COVID-19 pandemic, where oil prices had risen to a near constant rate. This is due to an increase of demand of oil by China and the cutting and limiting of oil supply by the OPEC. This oil price value was not helped in part due to the second point, which is the fall in local currency value. The ringgit Malaysia had fallen when compared to the US dollar that is commonly used for trading internationally. The third one is strict lockdown rules. Due to the strict lockdown rules, businesses were unable to get a supply of their goods and raw materials for production. As such, due to an increase of demand compared to a low level of supply, there was an increase in prices and as such an increase in operating costs. That's all from me. I would like to pass on to my friend.
Hello, I'm Yusuf Juhi. Now I'll talk about the digitalization. As an unusual decline in economic activity was caused by the start of the COVID-19 pandemic and the implementation of the Movement Control Order, which is MCO, in Malaysia. Malaysia's GDP declined by a record-breaking 17.1% year-over-year. In the second quarter of 2020, companies implemented digital strategy to make up for the decline in traditional revenue sources. Businesses that are left out of this digital revolution may find it difficult to exist, let alone grow or more as more businesses venues go digital. In Malaysia, there are 920,000 business entities, and 99% of them are all small and medium-sized enterprises. In 2018, SMEs in Malaysia employed 66.2% of the labor force and made 522 billion or 38.3% of the country GDP. They are divided into three groups called micro, small, and medium businesses, depending on the type of business. The volume of sales and the number of employees, enterprises make up 76.5% of Malaysian SMEs. In contrast, medium and medium-sized enterprises comprise only 2.3% of SMEs, as the table showing here. Next one, yeah. Now I'm talking about the issues and challenges of the digital for SMEs. First one is the limited digital infrastructure. The lack of digital infrastructure is one of Malaysian SMEs' biggest challenges to digitalization over the past few years. Malaysia has achieved great advancement in the development of its digital infrastructure, but there's still more work to be done, since many businesses in Malaysia are located in rural area without access to stable internet connectivity. Implementing digital technology can be challenging. Additionally, poor or unreliable connection might make it difficult for SMEs to use digital technology efficiently, even if they have good access to internet. Second, lack of digital skills. The lack of digital skills among Malaysian SMEs workforce is another issue. Older businesses owner who may be not familiar with the most recent digital technology operate a large number of SMEs in Malaysia. Due to this, it may be challenging for these companies to adopt new digital technology like e-commerce platform or digital marketing techniques. Even younger business owner might not have the ability and expertise necessary to use these tools effectively, which might limit their capacity to compete to grow digital economy. Third, cost of digitalization. The cost of digital tools and technology could be expensive, and many SMEs cannot afford the cost of digitalization and cannot invest in the technology due to the lower profit that they make compared to the bigger enterprises. This is particularly true for smaller SMEs that operate on tight budget. However, failing to invest in digitalization can leave SMEs at a significant disadvantage compared to larger, more digital savvy companies. Fourth is cybersecurity. As more SMEs adopt digital technologies and rely on them to survive the COVID-19 pandemic, they become more open to cyber attacks. Many SMEs are at danger of data breaches, theft, and other cyber risk because they lack of knowledge and find it necessary to put solid cybersecurity measures in place. Many SMEs lack that technical experts and sources needed to implement strong cybersecurity measures. They may not have in-house IT staff and may not be able to afford to hire external cybersecurity experts, whereas some SMEs may not be aware of the risk and implication of cyber threats. they may not underestimate the potential impact of data breach or other cyber attack, which can leave them vulnerable. Now I'll pass to continue this slide to my friend Vinod.
Thank you, Yusuf. Okay, I'll continue with digitalization issue, which is data privacy. Digitalization concerning data privacy and data protecting are becoming more urgent as digitalization generate more data. SMEs must make sure that they are compliant with data protection law, which is there's a lot of law that contain data privacy. And next is cultural change. As new technology and method of working are implemented, digitalization may demand a considerable cultural shift within SMEs. And next one is customer expectation. Without making investment in digital platform and technologies, SMEs could find it difficult to meet this expectation because we are as a customer we have a lot of expectation which SMEs struggle to do it. And the next is competition. Business now find it simpler to compete with established competitor in the new market because of the digitalization. SMEs may struggle to compete with more established or larger companies that have made significant investment in digitalization. And last one is adaptability. Digitalization is evolving quickly, and new platform and technologies are constantly being developed. SMEs may find it difficult to keep it up with the pace of digital change. That's all from me. I'll let my friend continue for policy and government issue. Thank you.
Okay, so we're going to discuss about policy and government issues. What is policies? Policies are laws, regulations, procedures, or administration actions, incentives, or voluntary practices of government and other institutions, which are frequently reflecting a resource of allocation. So the government in Malaysia is business friendly, but they do not necessarily market they are not necessarily market friendly as they utilize many quotas, subsidies, concus- concessions, and licensing mechanisms to regulate businesses. The policy process resembles a central control economy with a detailed 5-year plan to spell out the economy situation and outline detailing the agendas for the next 5 to 10 years. The government in Malaysia is mostly focused on parliament constituency and ceremonial duties, as it seems like the formation of public policy is separated from the political process. Sorry. So during the COVID-19 pandemic, the COVID-19 pandemic has made it difficult for the business to operate as they sorry. The COVID-19 pandemic has made it difficult for businesses to operate as there are many factors restricting them to have a smooth operation, such as either factories having shut down because of the movement control order, which leads to a limited stock of their supply, or the location of their warehouse and factories being in a location that is over the boundaries that were set by the government during the MCO. And this also limits the businesses to restock their supplies and um, makes them not meet the demand that is requested. So having the businesses apply to reach for those locations every time to restock their supplies is also a problem for them. And other than that, the Malaysian government also introduced Prihatin during the COVID-19 pandemic for these businesses to give them relief from the financial burdens of them operating during the pandemic. And the the Prihatin movement did help them significantly, but it only helped them in the time span of either 1 month or 2 months, depending on the size of the business. So moving on to the issues of the policies and government. The first one is the size of SMEs. The policies made should be applicable to all SMEs and not specific to a certain category, as with larger SMEs, they might have millions in cash revenues that could lessen the burden of the business for them, while the micro businesses do not have the same revenues to support them. So policies should be adjusted based on the situation that it is applied to, and it should not be generalized to every single condition, as different sizes of businesses have different kinds of financial support to help them. Second is unregistered SMEs. So the SMEs that fail to register their business at Companies Commission Malaysia or SSM without business tax with LHDN will not have the benefit of microgrants and other government aids, as they lack the registrations and denies their businesses. So these businesses should apply to the SSM and also pay with the business tax. But if they do not have the financial aid to help them with this registration, then it will also burden them later on. So the government should find ways to help with this problem, as smaller businesses and micro businesses might not have the financial aid to help them with these taxes and this registration. Number three, bank loan delays and rejections. So banks prefer to deal with existing customers only, as they have procedures that require them to know your customer guidelines, which drags the process of loan approvals. So banks typically cater to existing customers, as it creates a easier application for your loans to be approved or rejected, as they already know your financial background of your business and your capability to pay back the loans. Number four, wage subsidy programs or WSP limitations. Businesses are required to retain their staff for at least 6 months, and salaries cannot be reduced, which further explains why many SMEs hesitate to take up WSP, as the cost of upkeeping payroll outweighs the benefits of WSP. So number 5 and 6, I'm going to pass it to Aina.
Alright, so as for number 5, policy gaps affect e-commerce processes. Due to the lockdown policies during the pandemic, businesses couldn't access their warehouse, which led to prevention of sorting, packing, and dispatching orders. Even if the business was operating online as listed as an essential service by federal government, the e-commerce as an essential service did not in line with its situation. And for number 6, receivables management. Companies experience difficulty in collection payment from customers while still owing suppliers payments. They find themselves caught in a cycle and are unable to access the SRF or form of additional working capital. And for the next slide, I'm going to pass it to my friend.
Okay, thank you. I'll continue to the analysis and explanation. So the COVID pandemic has a significant impact on the financial stability of Malaysian SMEs, with reduced sales and revenue being a major challenge. Lockdown measures and social distance guideline have distributed traditional business model, change consumer behavior, and reduce sales for many businesses. SMEs in sectors such as tourism, hospitality, and retail have faced greater challenges due to the sudden of sharp drop in demand, leading to even greater revenue losses. Many businesses have invested in digital marketing, social media, and e-commerce platforms to reach more users and capitalize on the shift to online shopping. Some some small businesses have adjusted to their business models and produce offering to meet changing consumer needs and preferences during the pandemic. Cash flow problem have also become a major challenge for Malaysian SMEs during the pandemic, mainly due to reduced sales and supply chain distribution. Many businesses struggle to generate enough cash to cover ongoing costs and meet financial obligations, leading to increased unemployment and economic hardship. In addition, small businesses are struggling to pay their rent or repay loans at risk of eviction, forced closure, or credit deterioration, which can have long-term effects on performance. Supply chain distribution during the pandemic have exacerbated small businesses liquidity problem, with many companies struggling to source raw material and finished goods, leading to production delay and increased costs. Digitalization, which I mentioned earlier, present both opportunities and challenges for SMEs in Malaysia. While digital technology can greatly increase SMEs' productivity and competitiveness, SMEs must overcome to challenge of limited digital infrastructure, lack of digital skill, cost, cybersecurity, culture change, customer expectation, competition, and adaptability to fully realize the benefit of digitalization. The COVID pandemic has heavily impacted Malaysian SMEs, especially micro SMEs, which make up 98.5% of SMEs in Malaysia. The government introduced Brihatin or the Brihatin Rakyat stimulus package to help ease the financial burden of the businesses and people affected by the pandemic. However, there are various and government support issues identified in the project. One of the issues that SMEs different size face different challenges, and policies made should be applicable to all SMEs and not specific to a certain category. Feedback taken from larger SMEs might not apply to micro SMEs, and vice versa. Another issue is that unregistered SMEs that fail to register their businesses at Companies Commission Malaysia and without business tax with Inland Revenue Board or LHDN will not have the benefit of micro grant and other government aid. Delay and rejection from banks to obtaining loan and the wage subsidy program limit option for certain businesses. The WSP require businesses to retain their staff for at least 6 months, and salaries cannot be reduced, making it challenging for some SMEs to take up the program. E-commerce has varying effect of different type of SMEs and policies gap affected e-commerce process. During the MCO, some SMEs were keen to carry e-commerce activities, but policy gap prevented them from doing. Another issue identified is receivable management, where companies managing receivable have experienced difficulties in collecting payment from customers. That's all I have, and I will pass next slide to recommendation.
Okay, so for the recommendation for SMEs, first, they should implement cashless payments. For example, mobile e-wallets and contactless debit and credit cards are expected to experience a higher uptake due to the risk of coronavirus contamination present on physical banknotes and coins. Secondly, formalize the informal sector. in the informal sector should register their businesses with SSM and LHDN and move forward by conducting their businesses in a proper manner to gain access to the benefits of social protection. And for the last recommendation would be they should implement high occupational health and safety standards, which many SMEs have failed to practice high levels of occupational health and safety (OHS) that needs to be improved. They should wearing face masks. They should encourage people to wear face masks, body temperature screens, social distancing, and sanitization processes needs to be practiced. I think that is all from me. Thank you so much.
So this is the end of our presentation. Thank you for listening.